It's Thursday. Let's take a look at some legacy charts. Going to start off with BTC, which for high time frames has virtually no appropriate technicals to be long here whatsoever. One thing that will flip early on low time frames, if it does flip bullish, would be the 4-hour, which currently has a bearish pitchfork and is below even the 200 period moving average on the 4-hour chart. It also has a potential white coffee and accumulation profile. So all three of these things collectively together will have confluence above 40K, basically, to say, all right, it's fine to be long here at this point in time. But just with any bull market, in a bear market, you have a series of consolidations and decision points. This is one such consolidation where it has the potential to break up, just as it did the other day, and did not. So you can't have the hopium engaged and just think, yeah, it's gonna break 40. I'm gonna long here. It's certainly fine to trade this range. It's a healthy range to trade, but the favorability is still down, remains down, regardless of El Salvador volcano money, all that narrative stuff. Sailor, I want to be bullish. It just the tech isn't there. If we flip to pure legacy now, the VIX here, the volatility index, continues to decline slowly over time. So you'd expect some bullish headwinds here at 16.28, but not really seeing it thus far on the BTC side of things. Dixie continues to sort of meander at lows. We'll take a look at that. Gold and silver look really good, continue to look good. SPX and NDX look ready to roll over along with crypto. So if we have a down week in either of SPX and NDX, that's a journey to 20K BTC. If we have a massive up week or weeks in DXY to 96, that's a journey to 20K BTC. And really, if gold and silver pop off, that'll be a risk-off environment. And that'll also be a journey to 20K BTC. So definitely worth keeping this stuff in the back of your mind on some alert or something, just to get a flavor of what's going on in non-crypto realm. There's the DXY low time frames. And it's been unable to make any higher highs or sustained higher highs, just as with BTC right now. So it's kind of correlating roughly positive, like it's showing here on the 30-week rolling correlation there. So that's generally not great. We don't want to be correlated with anything, specifically DXY, but on high time frames, DXY is oversold at multi-year support. And if this does retrace to 96 within the next 6 months, it will not be bullish for crypto at all. So keep that in mind. Now, there's virtually no fundamental reasons why the DXY should retrace. So if I separate my technical brain from my fundamental brain, this should continue to break down, which should bring bullishness for crypto. Based on tech, though, it just looks oversold, and it looks ready for a bounce to at least 94. But the cloud likes 95, 96 based on these levels here. Also a potential macro inverted head and shoulders situation that would also propel this back up to 96. So worth paying attention to that, worth paying attention to gold, which continues to trend above the weekly cloud for the first time this year, although the TK cross is still bearish. And you can sort of understand what's going on a lower time frame, because this looks incredibly bullish on cloud, right? But you have this bearish TK disequilibrium where we're way above the Kijun here. So we need the averages to catch up with price. Much like over here, you either go sideways and wait for the averages to catch up, or price meets those averages at 1820, something like that. At the same time, you're going to see the weekly TK cross flip bullish. And that's ultimately what you want to see. Currently, it's bearish. So there's definitely a divergence here, both on the weekly and the daily, telling you we are overbought based on these averages on the cloud. Currently, even with these settings, which you can use them or not, but I like to use them on everything. Here's silver, which is probably the best looking chart out of this video. Best looking chart I've seen in weeks. Continues to look good. I bought some today. Couldn't help myself. It's the weekly. It is silver, so it's going to take forever to play out. If it does play out, but if I'm on my deserted island looking at this chart, I'm thinking, okay, now's the time, right? It's 3/4 complete on the ascending triangle. It's post white coffee and accumulation, post breakout. This is a markup. This looks like it wants more. I couldn't be more bullish on this chart, honestly, and I'm not even a silver bug. It just looks really good. Here's the SPX, which is still at stratospheric heights, ready for 3,600, 3,500. TK disequilibrium here. Tons of reasons why on tech that this needs to cool off. So either we, like Corona March, sort of retrace back to this level, or price just sits sideways for a long time at this level and waiting for the TK cross up here. That's probably unlikely. Usually we see the mean reversion. Once there's a lack of momentum at all-time highs, maybe there's some sort of distribution event going on lower time frames, but even the NDX, the NASDAQ, looks momentumless in this region. Now, none of this stuff really matches risk on, risk off, because if NDX continues, which it might if SPX continues, then that would be risk on. And if we're risk on, crypto should be bullish. And if we're risk on, Dixie should be bearish. And metals should be bearish because they're a risk off vehicle. So all this stuff will move together, right? Silver will break out because everything else that's risk on will be selling off, including crypto. So if anything, silver, gold, stuff like that is a hedge against crypto downside at this point. But to sit in SPX and NDX in anything just looks problematic to me because it's so overbought for so long. Here's GME, which continues its path above the daily cloud, potentially to 550, 660. 666 would be a great meme high if this does end up breaking out. Certainly looking less strong today than it did a few weeks ago with the initial breakout. It had its sort of 3-drive pullback here. Potential cup and handle now as well, but it's got to retake 350 to sort of have any bullish continuation momentum, even though high time frames look like Adam and Eve, ascending triangle, all this bullishness, right? But until it breaks 350, it's not confirmed. Even the trend likes it on low time frame. So I'd be careful with this. If it doesn't break out, it's going to... The reality is it belongs sub 30 and it's 10x that now. So you can do the math on where that should be. Here's AMC, which has already started to retrace after breaking out. And this is the silver chart, right? This is the silver chart pre-breakout where you have this accumulation, you have this ascending triangle, Adam and Eve, whatever you want to call it, pre-breakout, additional consolidation, ready for markup. And then you get your breakout. It takes special conditions to get what we got with AMC on top of Robinhood, Reddit, hedge funds eating other hedge funds, whatever it is. It takes special consolidation conditions in the market for that to happen. So, AMC is nearly there. If it's going to happen, it's got to happen soon. And again, you can see how this broke out like 3/4 full. That's the key as well on a lot of these chart patterns. You don't want them to consolidate to completion. They will likely break out before that entire pattern fills in. Here's MicroStrategy, which helmed by Michael Saylor, continues to morph into a Bitcoin ETF in some way, shape, or form. This is a super low time frame chart, but I don't really see anything here. It's just a giant mess. The reason it's important to look at this is because it's 80% correlated with BTC. So if this starts to move before BTC in one way or the other, it's worth paying attention to, right? So it's pulled up after the 1 point whatever billion raise that they did for additional funding to buy BTC, but it doesn't look like anything to me on low time frames. Tesla looks like it's in trouble. Like I mentioned last week, bearish 5,200 cross is coming for Tesla in their Q3 or Q2 earnings report revealed in Q3. I am sure they will say that they've sold their BTC. So be ready for that. But this chart looks like a descending triangle. It looks like it's ready for a halvening of its own to around 300. Squirrels looking weaker with a bearish death cross coming. Potential multi-headed head and shoulders, potential Adam and Eve or diamond top situation, all sorts of bad things you don't want to see at the top. And its retracement target would be somewhere between 160 and 86. So that is a significant downside as well. And again, all this it'll move together. It's unlikely that it moves on its own. And there will be a market-wide move if we do get it. Here's Coin, which continues to look much like Zcash, in that it just slow bleed, slow bleed, slow bleed. This is exactly what you don't want to see, these low volume, slow bleeds. If you're bullish, right? If you're bullish Coinbase stock, then you're probably focused on a multi-year plan, because this does not look bullish yet. You know, there's no capitulation. We've had a volume spike mid last month, but now we've got all this volume to contend with on the way up. This is a low time frame, not a lot of trading history, but you can't be bullish on anything that looks like that, certainly. And that's going to correlate with BTC as well. If BTC sells off, you know, this could go 100, 150, somewhere in that range, get really ugly. Here's the CME futures contracts, and we have an expiry on the 25th. CME futures are currently in backwardation, which may switch to forwardation once this rolls over to the next contract, but it's unlikely that a bunch of people are going to take massive positions with the expiry so close. Even though it is 15 days away, it's not, you know, it's 90 days away, right? So this is the argument for low volume, low open interest, premium decay. This thing has a forced expiry on the 25th. So yes, you can play the future futures contracts that are all listed here. But for the most part, most of the volume is on the near-term contract. So based on OI volume, the COT report, the positions report, it's just like looks like there's no excitement for anything right now on the current contract or the current premium schema, whatever you want to think of that as. This is ETH on this same calendar. The ETH contracts didn't start till 2021, so I think February was the actual start date, but you can see even how the ETH price has lined up with these sort of mini dips in spikes in volatility around these dates. So as the CME ETH futures gets bigger, as these options expiries get bigger, these dates will become more and more important as more and more people will be looking at them. More and more money will be changing hands surrounding those dates. So it's always important to look at that when you're thinking, okay, you know, I'm bullish here based on X, Y, and Z, but where are we on the futures calendar? You know, are we getting close to an expiry? Did an expiry just happen? What's the futures premium? Is there a premium? All those things are worth looking at before sizing up. To see open interest drop, volume drop, certainly not bullish by any means. So, you know, again, it's it's hard to remain bullish here on much of anything. Here's that COT report, the positions basically of all of the traders trading the CME futures. And I said this a while back, but you know, everybody got super bullish when they saw hedge funds net short 1.5 billion or whatever, but this likely doesn't represent a naked short. It represents a net neutral position, in that they're probably long spot or long something else that has exposure to BTC. Maybe they're long GBTC and short futures. Maybe it's a cash and carry trade. You know, there's a lot of stuff going on here. They're not just short BTC, most likely. And to see those shorts come off is probably more bearish, because you're just seeing a lack of interest on the long side, on the net zero side of that. So maybe we don't actually get bullish again until shorts rev up back to those previous levels. Kind of counterintuitive, but that's how I look at it anyway. Here's a grayscale, GBTC and ETH. The GBTC premium or discount has actually shrunk, so that's way better than it was sitting at 20% above or below spot. The ETH discount is growing slightly. ETH isn't volcano money, so maybe that's the reason why the GBTC discount is shrinking relative to the ETH discount. So the general sentiment is another week of wait and see, be careful. You'll figure out what's going on very quickly when everything starts to move together or inverse of one another. Lastly, I'll just mention the ETH-BTC fund. I trade for Enzyme, or I trade for Techemy Capital on Enzyme, non-custodial portfolio management. You can see everything I do here, AUM, performance, allocation. You can see me going in and out of Aave, you know, what I'm doing on all these dexes. You can see the trades, everything I'm making. So if we start to break lows here, I'll be cutting this, and I'll be entering into SNX inverse BTC, inverse ETH positions to capture that downside if we start to break down. You know, if this is a 20K journey, you don't want to be on the long side of that, or maybe you do and you don't care, but it's not for me. And we also have a DeFi portfolio that I also trade, again, very similar, You can see all the allocations, the trades I make, deposits, withdrawals. You can see the lending I've been doing on Aave lately to try to capture some upside. DeFi is in trouble because it's also at lows and has a potential 50% drawdown in basically everything that's on this list. So I'd be forced to sell everything. I mean, that's where we're headed if we start breaking lows here. It's going to get ugly, so be prepared for that. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.